What's going on, y'all? It's your boy Gav. We are finally here making the crypto video. In today's video, it's going to be a long one. I'm going to be breaking down my entire bull case for crypto, why I think it's going to go up, why am I investing in it, what does my portfolio look like, and how am I approaching investing it, and sharing why I think it would be a good idea for y'all to consider investing some risk capital into crypto as well. And so we're going to be diving into that. It's going to be broken down into a few different chunks. But before I begin, I have to say this. I have to say it. Guys, I am not a financial advisor, okay? This is not financial advice. This is simply your favorite Italian friend giving you some insight into what I've learned over the last 4, 5, 6, 7, 8 years in studying the markets and psychology, and in particular blockchain and crypto technology, and how I think that applies to some pretty compelling investment opportunities in my own opinion. So know that I'm not a financial advisor. This is not financial advice. I'm not telling you should do this. I simply want to share what my own thoughts are. And I think that if you have risk capital, you make your own decision on if you think this is a wise thing to invest in. I personally am doing that myself, but I'm doing this for educational purposes. So I got to share that. Make wise decisions, guys. This is high risk, high reward game. Crypto is kind of wild and volatile, but I think that if you approach it properly, you can make some money. And so I got to get that out of the way. But first things first, we are going to be diving into 5 reasons why I am bullish on crypto. Let's dive in. All right, guys. So jumping in, I have 6 reasons why I am so bullish on crypto that I'd love to share with you guys for the next 18 to 24 months. I'll go over why 18 to 24 months here later in this video. But the first reason why I am bullish on wanting to invest and allocate some capital to crypto, whatever your risk tolerance is that crypto is actually a very compelling technology. Better said, blockchain is a really compelling technology. And so if you don't know what blockchain or crypto is, I don't want to go in the depths of explaining the technicalities. Just hop on YouTube and type in what is blockchain and crypto. There's some really good explanations. Just go find a video with a lot of views from a channel that has a lot of subscribers, and they'll do a good job articulating it. But it is a groundbreaking technology that is going to change the world and already is changing the world. And the best use case and the best example of that is Bitcoin. And so I'm sure most of you obviously have heard of Bitcoin. What is it? The best way to describe it is peer-to-peer digital money. It's a digital store of value, a digital gold, etc. That is the antithesis of like US dollar or fiat money currencies across the world. And so all of us now are very, very well aware of what inflation is, which is essentially the dilution of your purchasing power in the US dollar. And the US dollar is not something that you want to hold or invest in along with other fiat currencies. And so Bitcoin is compelling in the sense of that it has a fixed limited supply. It is censorship and like government resistant, and you can't change it. And you can't mess with it or alter it. And so it is a safe haven for people to put their money in when global fiat currencies are being diluted through inflation across the world, being printed out of thin air. So Bitcoin is a reserve currency for you to invest in that can protect you against inflation. But it goes so much more than that. You also have something called Ethereum, which is another major token I'm sure all of you guys have heard of, which the best way to think about Ethereum is a decentralized supercomputer that is also peer-to-peer money, similar to Bitcoin, but in the form of Ether, which is also called Ethereum. And so I can go in the depths of what blockchain is, but it is an actual legitimate technology that is going to change the world and is already changing the world. And we see that right now happening with Bitcoin and a lot of different decentralized applications if you're paying attention to the crypto world. But really, to synthesize that, there are 3 powerful cultural and technological forces colliding that I think rise the level of crypto's importance for a legitimate investment rather than it being some internet money or Dogecoin meme or some digital gold in the form of Bitcoin, which is, I think, often overlooked in a very legitimate argument and a legitimate bull case for crypto. So the 3 things are: 1, there is a very clear erosion of consumer trust in governments and corporations. We think that is so clear now, especially that what has happened over the last 4 years, what happened across the world. That is very clear that there's a very big rise in the lack of erosion trust in governments and corporations. And the nature of blockchain is decentralization, in that we take the powers of centralized entities, whether it be a government or whether it be a corporation, and decentralized powers through blockchain now democratize that. And now blockchain allows for decentralization, which is amazing in all sorts of different forms, whether it's money like Bitcoin or it's decentralized applications, etc. And number two is that crypto networks unlock novel ways to organize economic activity and incentivize human behavior using new programmatic systems. It's a fancy way of saying crypto does a good job of incentivizing people to participate in new forms of business, and then they'll be economically rewarded. And so a really good example of this is a company called Helium. And so if you're not familiar with Helium, Helium is essentially the decentralized version of Verizon and AT&T. And so what Helium does is they offer the cell tower nodes that emit cell service. They sell them to people who are willing to buy them, set them up in their house, and then emit the cell service. And if they can do that across a wide variety of people across different cities and states, the democratization of those people buying them set up a cell service area across the United States, very similar to Verizon and AT&T, but instead of you doing that all on your own or Helium taking all that risk, they spread out that risk to people who are voluntarily willing to help them. And a reward for the people who are helping Helium, they get paid in the Helium token, which is an Ethereum or Solana-based token. And so what's cool about this is Helium no longer has the capital risk or the major risk of having to go fund all of these cell towers being built and building these nodes across the United States, to then obviously build a cell service that people would be willing to pay for, so we can call people and text people and use the internet without Wi-Fi, et cetera, right? But now they've democratized that, and then they built an incentive structure for people to want to be those node operators, and they get rewarded in Helium tokens. So once that is done successfully, they get people to buy and set that up. People can then obviously use the cell service like we use AT&T or we use Verizon, et cetera. And then when people pay Helium, the company, for their cell service, they give a portion of those profits to those operators in the form of Helium tokens. And then, so that just creates a really new, novel way for a business to be formed, to where now the benefit for Helium is they don't have to have the risk of managing all those cell towers or having the capital to go out and do that. And now there's a system where the democratization and the decentralization of this, passing off that responsibility to the node operators is really cool, to where now they can economically benefit from being a node operator. And now you have a really cool decentralized system. And so that is just one example of that happening. And there's lots of other ones too coming up now. And that section of crypto is called decentralized physical infrastructure network, or called DPIN. It's a really cool niche in crypto right now. And the third reason of a powerful cultural and technological forces colliding is that a phrase called software is eating finance. Essentially, that software and finance are combining to create a new type of money. And so there's some really, really interesting new technologies being leveraged with crypto. Another way of saying this is maybe decentralized finance or DeFi or open finance. But crypto is going to offer a lot of financial benefits to people in countries that may not have the privilege like the United States or some first world countries to have access to finance and have access to loans and have access to money and capital just because their systems and structures aren't set up properly. And so all that to be said, I could go deeper on that. Crypto is groundbreaking technology. It is actually going to change the world. There is actually going to be real world use cases like Helium and a bunch of other ones that people are going to be able to benefit from. This is a legitimate technological class, not just some internet money, etc. It's real. It's the real deal. And the next reason why I'm so bullish on crypto and why I think it's a good investment for risk capital is that it has crazy high explosive gains potential. And so I'm going to show you guys 4 different examples of charts showing Bitcoin, Ethereum, and then 2 other coins, one called Solana and one called Axie Infinity, just to showcase to you guys what the returns could be like and over what time frame for crazy returns that really you can't get out of any other asset class in the world. And so hopping over here, I'm going to show you guys a few charts. The first one is the OG Bitcoin. And so obviously, guys, here is a chart of Bitcoin. It's over since when here, this has starting off in 2015, 2014. And I want to show you guys the potential for explosive returns here. And so obviously, if you're in finance or you're paying attention to just general investing principles, if you just were to take a conservative approach and invest in the United States stock market and a few diversified index funds, maybe some bonds, golds, etc., money markets, T-bills, it'd be great if you made 8 to 9, 10% a year, like in returns, consistently. And so obviously I very much endorse the strategy. You should for sure be doing this, but from a risk capital standpoint, there are some pretty crazy explosive gains you can make in crypto. And so looking here at Bitcoin, I want to just go ahead and look at the last cycle, or the last bull run, if you will. So starting off here in 2018, and obviously went all the way up here to about 69,000 in 2021. And so let's say, for example, you were able to, you saw Bitcoin kind of die off in 2017, and right around this point in 2020, it starts going up again. You decide to throw some money in there. So let's go and say you invested right here in May of 2020, and then you were a wise investor and smart, and you held, and then you decided to sell towards the top, which obviously is a little hard to do, but in this case, you had a lot of different time frames to sell towards the top. And so up here, let's say you bought it down here, and then you rode it all the way to, let's say, this point right here in November of 2021, towards December. If you would have sold it anywhere in this time frame, you would have made anywhere from essentially a 400 to 500% return over the course of essentially a year and a half, which is insane. And so even to go even more from an extreme example, let's say you were someone who's a real OG in crypto, and you saw Bitcoin way in the past, and you were like, I have to buy in this thing. I believe in the vision of Bitcoin and decentralized, censorship-free, government-resistant money that is a fixed supply and inflation proof. This would have been a good investment. And so to show you what your returns would have been if you would have invested in 2016 all the way down here, let's say starting at this point in January 2016, you bought it down here right around $400, and then you decided to ride it all the way to the top. What would your return would have been? You would have made 4,562%, guys, on Bitcoin if you would have done that. So that's actually insane. So the explosive gains potential is nuts within crypto. Obviously now it's a little bit less because Bitcoin has risen in market cap, and so it takes a lot more money to rise Bitcoin's price. But it's there. There are explosive returns to be made within crypto if you time the market properly, and it's pretty epic. Now let's take a quick look at Ethereum, and then we'll move on to Axie Infinity and Solana to showcase some more explosive gains. So if you look over here on this chart here, we have the Ethereum chart on the weekday, which, as you can see, is very similar to Bitcoin's chart and chart pattern. This is because crypto likes to follow Bitcoin in a chart pattern, especially Ethereum. That happens for a lot of different reasons, mainly because Bitcoin is the leader. It was the first major cryptocurrency to exist, and essentially the market leader, like an index fund in a sense. And a lot of stocks will follow the index fund. And so a lot of the cryptocurrencies will follow Bitcoin, which is why you see a similar chart pattern. But Ethereum launched in 2015, as you can see down here. Let's say, for example, you bought Ethereum as it was coming down after this explosive run up in 2017, and you bought into the idea of having a decentralized supercomputer that you can build decentralized applications on, which is what Ethereum does. More than just being Ether, like peer-to-peer money like Bitcoin, it is also a supercomputer you can build apps on. So let's say that you did that and you decide to buy, dollar cost average from this point to this point, where your average was right here, right around, $300. And then similar as Bitcoin and Ethereum exploded, let's say you got pretty close to the top and were able to time it pretty well. Let's say you sold it just right around this point. You would have made a 1,300% return on investment, which is insane in the last cycle. Let's say you did that towards the beginning when Ethereum launched, all the way down here. Let's actually go figure out what that exact metrics look like if you were to buy it earlier. Let's say you bought down here towards the beginning, and you had it all the way to the top. Yeah, you would have made a 17,000% return, which is nuts. And so obviously a logical question is, well, Gavin, how are you supposed to know when these cryptos are going to explode or not? How can you possibly put yourself in a position to time that? That is a great question, which we will get to later, of how can you possibly know when something's going to explode or not? The answer is you don't really know. It's impossible to predict the future, but there are ways to put yourself in positions to buy tokens and cryptocurrencies where they could turn into an Ethereum example like this. And so next, I will show you Solana in particular. Solana is a good one. Solana is very similar to Ethereum in a sense of it is a It is its own unique blockchain, very similar to Ethereum, but it runs differently and operates differently. You can think of Ethereum and Solana like operating systems with computers. And so, you have Microsoft operating system, you have Mac OS. They're both operating systems, but they have different strengths and weaknesses. That's a good way to think about it. This is Solana, for example. Solana, like I said, is similar to Ethereum. And let's say when Solana came out, there was a lot of hype coming around it because people were complaining about some of Ethereum's core issues, which mainly is Ethereum's gas fees, which is a transaction fee that you have to pay to send Ethereum across a network or to do other transactions based on decentralized applications that are built on Ethereum. It has high gas fees and the transactions take a while, they're slow. And so Solana came out and at the time was really compelling and still is really compelling because Solana was saying, hey, we will do faster transactions and we'll make transaction fees really cheap. And so those are two big value adds to the crypto space and people who are on chain using different protocols. And so if you're paying attention at the time, which is very doable by lots of different communities on Twitter, X, Reddit, Facebook, etc., mainly on Reddit and X, and you saw it, and let's say that you saw Solana come out and you wanted to buy a bag of Solana. And so let's actually go down here and show you what the price looked like when it first started. This is when it launched. And so maybe you weren't able to get in the very bottom, which there were some VCs who got in literally at cents, which is insane, like millions of dollars. And so they are now billionaires, obviously. But let's say, after this initial run up here and you came out on the dip, so it had some market validation here initially and then came down on a dip, you wanted to buy some Solana down here at $3, or so let's say your average price is $3. So your average price is $3 on Solana. And obviously you can see here, it absolutely exploded. And let's say you we're able to sell towards the top right here in the 220 range. It's essentially like a 50, 75, 100x return on Solana, which is insane. So the explosivity is crazy. And so what's crazy is we'll have one more example that I'll show you called Axie Infinity, where it really isn't even that crazy compared to what Axie Infinity was able to do on regards to the potential for returns if you're looking properly. So let me go ahead and load this for you guys. Axie Infinity. Let's go ahead and pull up the day chart on Axie. And let's extrapolate this outwards to see what the chart looks like. AXS, USD, Axie Infinity. Okay, so I already have some charting here from the past, and this is what it looks like to have purchased Axie in the past. So Axie Infinity is a really cool token. It's a gaming token, and it was one of the first of its kind to exist. And as you can see, I've already done the math here. If you were able to purchase Axie Infinity from the beginning, which is pretty hard, then you sold at the top, you could have made a 1,133x return. That's insane. That's like you putting in $1,000 and turning it into $1 million. That's possible in crypto. So I showed you some examples, but you're like, Gavin, can you actually capitalize on this? Can you actually put yourself in position to make money on this? The answer is yes. I believe that you can, and we will get into that. But I want to move on to my next point of why do I think crypto is going to go up. So to summarize real quick, what I've talked about briefly is crypto is actually a legitimate technology in the form of blockchain. It is legit. It is going to change the world. There's already real world applications being used for blockchain. And then two, there's a lot of things happening in the world to support that. Like I said, the erosion of trust in governments and corporations. Crypto is really unique for creating cool economic incentives and new business models. And then also it's creating a new way for people to get involved in finance and have access to financial tools, especially in developing countries where they don't have access to that, maybe here in the States or in the Western Europe area. And there's explosive gains potential. So the next part I want to move on to is talking about the macro environment and why the macro environment is going to favor crypto assets going up in price. Okay, so now moving on to my next point of why I'm so bullish on crypto for the next 18 to 24 months is because the entire macro economy and the conditions around controlling what controls the macro economy are moving towards a a set of policies and realities that favor really risky assets going up in value. So that is a time in the economy called risk on assets. So allow me to explain. There really are two major reasons why I think this is happening, or why I think the macro environment is shifting to favor risky assets or risk on assets. And that really is dictated by the United States Federal Reserve, which we all know controls the interest rates in the economy, as well as some different liquidity levels in the economy, i.e. how much money is in the system, how much money is out of the system, through something called quantitative easing and quantitative tightening, which quantitative easing means putting money into the system. Quantitative tightening means taking money out of the system, and they have some very complex instruments of how the Fed does that. But the Fed has a lot of power over the markets, indirectly and directly. But there's a common phrase on Wall Street called "don't fight the Fed," and that is very true. And I think we all got a lesson of that in 2020, 2021 for those who are paying attention. And right now, the macro environment is starting to lean towards risky assets starting to become more favorable. And so we were just in a period where obviously we had what happened in 2020 with the global pandemic. And then what happened was the Federal Reserve lowered interest rates to zero to stimulate the economy. And then obviously Trump sent out some different stimulus checks to different people who qualified in the United States. And what happened was a combination of the Federal Reserve lowering interest rates, and then Trump's policies, and then the Fed's policies injecting liquidity into the system, which caused risk on assets to become more popular. And so the reason for that is, which I'll explain here in a second, or rather show you on the charts, is when you have a period of low interest rates, the amount of money that you can make risk-free in T-bills or in savings accounts or money market accounts drops because the interest rates are zero, which are directly correlated to those assets and making money there. Now that those investors who were investing in T-bills or investing in those safe, risk-free returns, because it's backed by the U.S. government, are now looking for another place to make money because they're not making money there. So they're forced to go make money in another asset class that's more risky or risk-on, such as cryptocurrencies or high-growth tech stocks or different types of high-growth, high-risk tech ventures, or not even tech ventures, maybe just startups in general. They have to go put their money there because they need to make a return on their money, because inflation will destroy their wealth if they don't invest it. So that's why that money shifts into more high-growth speculative areas. And so what I want to show you on the right here is a good reflection of what happened in 2020 when the Federal Reserve lowered interest rates and started very aggressively pumping liquidity into the system through quantitative easing. This right here is a chart of the ARK Innovation Fund. So some of you may know who Cathie Wood is, and the ARK ETF. This is a exchange traded fund that is essentially a representation of high growth, risky assets. Like the ARK Innovation Fund represents risk on assets really well in regards to how much they're valued. So right now you can see here on a chart, this is 2017 on the bottom all the way to 2020. Was doing okay, making a pretty good return over the course of a few years here. And obviously during COVID, it dropped. But then after the Federal Reserve lowered interest rates and started pumping money into the system, what happened to their share price? The share price went from $35 a share all the way to $156 a share, all in the matter of essentially a year, which is crazy. But this is a reflection of what happens when the Federal Reserve lowers interest rates and when there's quantitative easing, is that risky assets or risk on assets start to become more popular. Also at the same point, let's go back and look at Bitcoin's chart. What happened in 2020? We see here, obviously this is what happened with Rona. It dropped, and then Bitcoin literally went from $4,000 all the way up to $64,000, $65,000 basically in 1 year. 1 year, it did that return. And so if you were someone who believed in the principle of don't fight the Fed, and you want to deploy money where the Fed is encouraging you to deploy money. So right now, we're in a season of higher interest rates, but the expectation is that interest rates will drop. When that happens, and then the Fed starts pumping money into the system, the expectation is that risk on assets such as Bitcoin and ARKK, ARK Innovation Fund, go up in value, as we're seeing here. And so you can also go back into history and look at different points when the Federal Reserve lowered and raised interest rates. This pattern correlates almost exactly throughout different asset classes over the past 50 to 60 years. And it's something that people really overlook. And there is a common phrase on Wall Street, I think I said it earlier, is that you don't fight the Fed. And that's there for a reason. And so that's one bullet or one little piece of my argument of why I think you should invest in Bitcoin or invest in different cryptocurrencies, is because the macro environment is now shifting to a period where you should be investing in risk-on assets and the price appreciation should be there. And so, but let's move on to the next section. Okay, now moving on to my next point of why I am so bullish on crypto, and that is because the Bitcoin 4-year cycle is real, very historically accurate, and then two, the halving is coming. And so you may be like, Gavin, what is the 4-year cycle and what the frick is the halving? Well, I'm about to explain it to you, okay? So let's go ahead and direct your attention. Continue watching because I'm about to explain to you what the 4-year cycle is, why it's important, and what the halving is. So first, let me explain the cycle at a high level. The 4-year cycle is a 4-year pattern that Bitcoin likes to follow ever since its inception in January 3rd, 2009. So on here on this chart, we have data all the way back to 2009, but it's in October, which is okay. It'll still follow it anyways. Let's go ahead and go back to this cycle. The cycle is essentially a representation of 3 years of going sideways, a little bit up, and then really, really hardcore up, and then the 4th year is down. And so let me go ahead and showcase it in this chart down here. Let's go down to the first cycle. Ever since its inception was here. So obviously since it started, it didn't have a down cycle because it launched. So, but the first 3 years are essentially going sideways, as you can see here. It was going sideways, and then it starts to go up, and then skyrockets all the way up, and then comes down to the bottom. And so this next one's actually a little bit more of an easy representation to look at. Let's go ahead and start off with year 1 being the bear market, or being the market that goes down, which is almost always 12 months to a T. So as you can see on this date, or on December 13th, it goes down. This is the bottom here, and it matched it here on this date, but this is the local bottom on January 15th, which is about 12 months. And then from there, it tends to go consolidate, go sideways for about a year, and then it starts to accelerate and go up. And then the last year, it really starts to go parabolic and explode, and goes up in value. Now, this is about 8 years into existence for 2 4-year cycles. And now let's go look at it again, starting in 2017, 2018, which is when the mainstream public really started paying attention to Bitcoin for the first time, or rather last cycle. And as you can see, in 2017, it peaked right around 19,000. It went down for 12 months, almost exactly to the T, 12 months. And then you can see it kind of went sideways for a little bit for about a year, and then slowly started going up again. And then it exploded to new all-time highs for a year, for about 36 months, for about 12 months. So in total, you have about 12 months of a bear market going down, and you have about 36 months of a bull market where it goes sideways up, and then really explosive, shooting towards the sky. So this pattern has happened literally for the past 12 years. It has happened for Bitcoin cycle 1, Bitcoin cycle 2, and for Bitcoin cycle 3. And so if history repeats itself, it's going to repeat. And the 4-year cycle is very real. And then another thing that is tied into the cycle is something called the halving, which I'll pull up a chart here to show you what that looks like. All right, so I have a chart here pulled up for the Bitcoin halving and what it is. Before jumping into showing you the halving chart, what I'd like to share of what is the halving. And so the halving is a fundamental thing built into Bitcoin's code. So the way that Bitcoin works, just at a super high level, is it is a blockchain technology where you can send peer-to-peer money in the form of Bitcoin to each other without a centralized entity like a government or a bank, which is how you send any money now. You have to go through a centralized entity. And so the Bitcoin network, which is powered by a group of computers that voluntarily offered their compute resources to help power the Bitcoin network, they are offering their compute and resources to help verify transactions on the blockchain and make sure the network is working so people can send money to each other. And the internal security system that the founder built, his name is Satoshi Nakamoto. The internal security system he built is something called hashing and solving complex equations to make sure that no one can tamper with the Bitcoin's code, like and how it works, which is supported by everyone. So it's rather complex. You can go look how Bitcoin works. But what happens is when computers are voluntarily offering their compute resources to help support the network and to verify the network, they get rewards in the form of Bitcoin. These things are called Bitcoin miners. I'm sure you've probably heard of them before. And Satoshi intentionally built into the code that after a certain amount of blocks or transactions, as they are completed over time, the amount of reward that is given to these miners gets cut in half, which is called a halving. And the halving is based on the transaction history of Bitcoin, happens roughly around every 4 years. It's based on a certain amount of transactions, or technically speaking, blocks produced on Bitcoin's network. And whenever there is a halving, like I just mentioned, the amount of Bitcoin that is rewarded to these miners for helping stabilize the network and make Bitcoin work and just do what it does, the amount of rewards gets cut in half. And that, historically speaking, has been a very bullish event for Bitcoin. So let me go ahead and show you this chart over here. This is a chart starting from 2011 showing what happens in the Bitcoin halving. So what I want to do is show what happened in 2013 to 2016. So you can see here, we had the bull market in 2013, 2014, and then we had a bear market. And like I said, tying to the 4-year cycle, we have 1 year of it going down. Then you have about a year or so of it going sideways. Then you have a year of it starting to go up, and then 1 year exploding. And you can see the halving is cut in between. Really, the halving is essentially the start of the explosive growth, as you can see here. You can see it reflected here in 2013. You can see it reflected here in 2016, 2017. And if this chart was finished, you could also see this in 2021, which the exact same thing happened in 2021. The high got all the way to 69,000 then. So there's a correlation of the halving and explosive growth. And so the reason that this happens on a fundamental level rather than a self-fulfilling prophecy level, which is also very powerful and people overlook that reality, just human psychology, is the amount of, essentially the reason it goes up, or Bitcoin's price goes up from the fundamental standpoint, is because there is now less Bitcoin in the system, like getting pumped into the system, which means if you have just simple economics 101, when you have an asset that people want and there's now less supply of that asset and the demand stays constant, the price has to go up. Right? Supply and demand. And so the demand goes up, price goes up, so it's demand, supply always go interchange with each other. So that's the reason there's less supply going onto the market, which means demand goes up, which causes the price to rise to justify people choosing to sell their Bitcoin to someone else. So the 4-year cycle is a thing, and the halving is a thing, and that is now coming up. And it's anticipated to come up in April, in the next 30 to 45 days. And when that happens, it is it has always been historically a very bullish event for crypto. And so that is the halving, and that is the 4-year cycle, and that is one of the reasons why I'm so bullish. Let's go ahead and move on to the next section. Okay, now moving on to the next point. So just continue to drill you guys with all these bull cases for crypto and for Bitcoin. The next reason why I'm so bullish on crypto is the Bitcoin ETF approval. This one is actually a really, really, really big one. So for those of you who are not familiar with what an ETF is, essentially means an exchange traded fund, which is a financial instrument that big Wall Street hedge funds, mutual funds use for giving their investors access to asset classes just in a really simple and easy way to buy. So the Bitcoin ETF has been something that has been worked on for a very, very long time. There's been a lot of drama on this with the US government and specifically an arm called the SEC, Security and Exchange Commission. And finally, after literally years for the crypto people fighting to get a Bitcoin ETF approved, it was finally approved. And what it means is now all of the money sitting in traditional finance. And so just to pull this up right quick on my side of things, there's an article from NerdWallet that shows retirement account statistics. There are $36.7 trillion. $36.7 trillion sitting in total U.S. retirement asset classes. So all the boomers, all the Gen X, all the freaking old heads, and people that are only pay attention to traditional finance, $36.7 trillion. They now all have a financial instrument to invest in the Bitcoin ETF. And so this is an article from CoinDesk, showcasing Bitcoin's ETF's approval from the SEC. There's now essentially easy access for people in traditional finance, i.e. $36.7 trillion for them to allocate into Bitcoin. And what's even more crazy about this is not only do they have these people have access to buying crypto through their retirement portfolios and like in a really easy way to buy crypto, but each of these massive funds or ETFs owners like Vanguard and like BlackRock and like all these other funds that exist on Wall Street, they are now incentivized to sell their clients on buying a Bitcoin ETF, because when they do that, these funds will make money off of the AUM, the assets under management that are in the Bitcoin ETF. And so they are incentivized to tell their clients, hey, you should allocate 1 to 3 to 5% of your portfolio into Bitcoin. One, because now it's a very legitimate asset class to invest in my opinion. But two, these people are going to make money off their clients when they do that. And also what's cool, or at least from a bull case standpoint, is traditionally when you have an ETF like this for a quote unquote commodity, a good example is gold, there's almost always one winner in the space. There's almost always 1 or 2 ETFs that take most of the volume of liquidity that people buy into. So now there's a marketing race between all these 8, 9, 10 firms that have created a Bitcoin ETF, and they're racing to market to all of their clients to get the most assets under management under their Bitcoin ETF in particular, to make theirs the largest, which then makes it look like it's the safest. It really is like a winner take all game. So now there's a bunch of marketing money being spent towards the general population and all these clients who bank or have their investments with them to get them to invest in their ETF so that they can make the most money. So now not only do you have access, like the traditional finance now has access to buy Bitcoin, but there's also marketing and advertising spend in the hundreds of millions, if not billions of dollars being targeted towards that $36.7 trillion, convincing them to put their money into Bitcoin. That's a lot of money, and that's a lot of willpower, and like a lot of power going into supporting Bitcoin's price. So that's super bullish. You now have Wall Street wanting to pump the price of Bitcoin, and arguably the most important figure in Wall Street, his name is Larry Fink. He's the CEO of BlackRock. They're by far one of the largest funds and have a lot of power. He's actively pumping Bitcoin, and on CNBC and these financial networks, pumping how everyone should get into Bitcoin. So that is another reason why I am bullish on Bitcoin and crypto. All right, so now moving on to my next point of why I'm so bullish on crypto, and that is a breakdown of 2 things. One, the reality of market and human psychology in this season will favor crypto going up. And then 2, retail, and there are more people in general, more people in the world are aware of cryptocurrencies, and they're aware of the excitement of investing in cryptocurrencies. And we also have GameStop to be thankful for that as well. And so what I want to start on is kind of talking about GameStop. And so if most of you guys know, you should have heard about what happened in January of 2021, February of 2021, is that GameStop out of nowhere exploded in price. There's a movie about it out now called Dumb Money. Highly recommend going to see it. It's really funny. There's also a little Netflix documentary on it too. But essentially what happened was there was a group of people on Reddit, a social media site, if you don't know what Reddit is, that were able to identify a really unique and really complex trading strategy called short squeezes to make GameStop's stock price go up and essentially fight Wall Street. And so it was essentially a reflection of the small guy, the retail money, the dumb money, people who should not ever beat Wall Street. They found a way to beat Wall Street and make them lose a lot of money, while at the same time making a company, especially Reddit people, which tend to be a little bit more nerdy, a little bit more gamer friendly, a little bit more people in that realm of things, which are great. We love those people. They tend the way to support GameStop was a way to support them as well. So it was almost like a David versus Goliath story. And what happened was that GameStop's stock like skyrocketed from like $10 to $15 a share to like $450 a share, and made some astronomical returns for people who invested in it early. But what happened during that was it drove a lot more people to download Robinhood and to download different trading apps and get people into investing. And they're now aware of the realities of getting to invest in high risk, high reward ventures. And so obviously a lot of people lost money in GameStop, which is sad, but the awareness of getting to participate in something like that increased exponentially, especially as Bitcoin later that year in 2021 started exploding, the rise of Dogecoin, all these other silly coins, that got retail money interested in crypto. So there's now way more people invested, or rather aware of cryptocurrencies and investing in more high-risk ventures. So I don't have any data to support this, but we know this is true just by market volumes in particular, and just by looking at what happened at GameStop. And so that's happening. And so there's more people just aware who are willing to purchase crypto. And now the on-ramp to crypto, the way to go from fiat US dollars into different cryptocurrencies is a lot easier now too. But something that I want to look at real briefly is some market psychology dynamics that I think are really interesting. So the first thing that I want to look at is something called the greater fool theory. And so if you can see on the screen here, the greater fool theory is essentially a short-term approach to investing where it says, like, it relies on the assumption that someone else will get caught up in the market momentum of something going up in value and that someone will pay a higher price for your asset that you own in the future because it just keeps going up. We know this is true 100%. This has happened all throughout history. It will also happen more. There was something that happened in Western, Eastern Europe in the 1900s called the tulip craze, where people were literally trading tulip flowers and it was just skyrocketing in value for no reason. It's crazy. We have examples of greater fool theory happening all throughout the markets. And my take, which is kind of a little bit of a hot take, is that the markets, they're not as efficient as you think. They're not as fundamental as you think. I'm sorry to say it. Sorry for my financial advisor friends. I just don't see it. I think the market, all markets are driven way more by emotion and by narrative, more than what people are willing to admit, especially the stock market. But I think in particular, a market that is driven the most by psychology, that is driven the most by narrative and story, is the crypto markets. And so I think the crypto markets, if you can understand human psychology and you can understand how people behave when prices go up and down and like what's happening with excitement or euphoria, depression in market cycles, you can make predictions of what's going to happen in the future. So transitioning into this little sheet here this is a chart representing the psychology of a market cycle and how people feel during these times. And I think you can make predictions of future prices based on these sentiments, which are very easy to figure out. And so as you can see towards the bottom, you have the rise in the price of an asset, then it dips here, then it kind of corrects to start to go up and then gets rejected and then goes all the way down, then starts again. You see disbelief here and disbelief here. And so as prices start to go up, people start to become really excited. They become euphoric all the way at the top here. Then as prices start to come down, they become complacent, anxious. They come into denial, panic, and then you have a very famous phrase in Wall Street called capitulation, where everyone chooses to get basically 100% out of the markets. And so to summarize what I'm saying is I think that there's more people invested, or there's more people aware of cryptocurrencies and the excitement of market phenomena of something skyrocketing in value. They now know that crypto is a place for them to do it. There are tools available for people to invest in crypto, such as Coinbase and Robinhood, and they're getting easier to use, and there's more exposure to crypto now than there ever was. And when things start to go up in value, when Bitcoin continues to rise in price, it already crossed its all-time high. It's on a little dip right now. As long as it continues to go up in price, as you see here, it's going to go from optimism to belief to thrill to euphoria. And then when this happens, there's going to be more and more and more money piling into cryptocurrencies because it is more driven by narrative and story and by human psychology than fundamental analysis, which essentially is how good is the business, et cetera. There's not a lot of fundamentals to crypto right now, which is fine. And it becomes more predictable. And then when you have greater fool theory come in, people will just buy assets because they think someone's going to come along in the future and buy it for a higher price from them. And that is something that is greatly overlooked in my opinion, and that you should not sleep on, is that human psychology. And so in the midst of the other 4 or 5 things I talked about earlier, I am a very big believer in human psychology driving market behaviors. And if you know how to read it and you know how to take advantage of it, it's a very lucrative opportunity in my opinion. So that's a big part of my bull thesis is I anticipate people will want to buy cryptocurrencies because they think it'll go up in value exponentially. And the expectation of how high it goes up will only compound on itself as the markets continue to go up. And that is a really big part of why I think it's going to go up. And you can see that reflected in the charts of some the past cycles from Bitcoin and other coins, which you can go back and look at from earlier in this video. And so that's that for that point. The last point I'll get to is the rise of real world mass adopted use cases for crypto coming up in this next section. All right, now moving on to reason number 6, the last reason why I am so bullish on crypto. It's kind of like what I mentioned earlier. Blockchain and crypto are very legitimate technologies to invest in. There are going to be real companies, real projects, real protocols that come out that actually change the world and bring material value. And I think this cycle, this point in time, we're going to see the rise of those companies actually starting to move the needle in the practical world of why you can use crypto, and there's going to be very clear reasons to that. And so the first one that I shared earlier was obviously the Helium token, which is the decentralized version of Horizon. Another version of that type of crypto is something called decentralized physical infrastructure network, otherwise called DePIN. Helium is a DePIN token. Another one that's in the DePIN category is called Render. And so as you guys know, if you've been paying attention to the technology or finance sector, AI, it's kind of popping off right now. It's a really big deal. NVIDIA and all these different chip providers that are necessary for powering AI and computers are exploding in value right now. And there's a lot of value in that space. And so one company, like I just said, is called Render. They make decentralized GPUs, which GPUs are very important for compute and for AI and for powering a lot of technology that we use on applications across phones and across computers. And what Render does, essentially, it decentralizes and democratizes access to GPUs, which historically speaking has been in control by Amazon, by Microsoft, and by Google and their different cloud platforms, where companies will go to those three big behemoths and they will rent GPUs from their cloud space to run different applications that we are using in our everyday life that we don't even know that's what's happening behind the scenes. What Render does is incentivizes consumers to put their own GPUs onto their blockchain network so that you as a company can go to Render and rent GPUs from a collection of people, a collection of different consumers, instead of going to Google or Amazon or Microsoft. And the costs are actually a lot cheaper, and there's actually a lot of security there, and you don't run the risk of Google or Amazon or Microsoft shutting down your application for whatever reason. And so you remove the security risk, and you also have actually cheaper prices because of the business model. And it works because the people who are volunteering their GPUs are getting paid in the Render token, and then people are obviously paying Render for that service, and then they're distributing the profits through Render tokens to the people who are contributing GPUs. And so there's a lot of really cool use cases like that happening now. I also own Helium and Render in my own portfolio, but I'm a really big believer in them. And one of the second biggest major use cases for crypto, I think, is going to come in the form of gaming tokens. And so the gaming market is astronomical. It's in the hundreds of billions of dollars now. People all across the world are gamers. It is an international thing. It's not just American. Everyone loves games. They're becoming more popular. They're becoming better. And the market is not stopping on growth. And crypto solves a really, really big problem in the gaming world, and that is the idea of ownership. And so if you're a gamer or you have friends who are gamers, you know that these people, and myself, because I was a big gamer growing up, and I'm still a little bit of a gamer, when you are in a game where you're working for a certain item to make your game experience better, and you get that item, it's a very valuable thing to get in your game. The problem is that the games own that item, and they can change your entire gaming experience at the click of a button because they own the game, which is a bad thing. And there's been lots of examples in the past of gaming companies or gaming studios really candidly screwing over their players because they took away a lot of items or they took away certain experiences that were key to the game for different reasons, whatever it be. So what blockchain technology allows for gamers is that now the idea of ownership and owning digital assets in the form of NFTs, which I'm sure most of you have probably heard of, but in the form of maybe some like monkey profile pictures or like a pixelated CryptoPunk or something, which has its own use case. But now like a more practical use case for NFTs and blockchain technology is for gaming assets to actually be controlled by the players and to be owned by the players. So imagine now you can play a game and you can earn an item in the game that was really hard to get. And so if you're a gamer, you know this. You can spend dozens, if not hundreds of hours working for a game or working to earn an item or get an experience. And that is really valuable to the gaming experience. Now imagine you can own that item in a crypto wallet and then sell it to another user who doesn't want to put in the dozens of hours or the hundreds of hours of work that you put in to get that item, so they can just immediately get that experience. And so now the work that you put in to that game can result in a profit, which is really, really profound. And that's just one example for the gaming use case. There's lots of other things I can dive into, but crypto and gaming, they just go together like peanut butter and jelly, or like a Belgian waffle myself. I just went to Belgium and the waffles there are sick. It was super good. But, peanut butter and jelly, crypto and gaming, they go together. It's going to be massive. And I think we are literally just one popular crypto game from getting popular on TikTok and Instagram, on Twitch, and absolutely popping off and causing a massive bull run and a massive rise in price in crypto games. And so I'm invested in a lot of different gaming infrastructure, as well as a few gaming studios. And I plan on investing in a lot more because I think crypto gaming is going to be the first real world use case that gets really popularized and is used by a lot of different people. And so those are the 6 reasons, kind of wrapping it up. The first reason, again, it's groundbreaking technology. Blockchain's already changing the world. It's going to continue to change the world. Secondly, the macro environment right now is favoring risky assets like crypto to go up in value because the Fed is going to lower interest rates and they're going to start pumping money into the system through quantitative easing. There's very high odds that happens. It's not a guarantee, but everything's pointing towards that. Third reason is the Bitcoin 4-year cycle and the halving, where the Bitcoin tends to move in a 4-year cycle. And we are now entering into the period of explosive growth based on Bitcoin's history. The halving is coming up, meaning that the mining rewards for Bitcoin miners who help support and run the Bitcoin network is getting cut in half, meaning there's now a less supply in the market. And if demand continues to increase or stays constant, Bitcoin's price is going to go up. And we now know that demand is going up because we had a Bitcoin ETF approval, which means all of the boomers and all the Gen Xers and all the people with retirement funds who don't have any risk capital associated with crypto, 34.7 trillion to be exact. They now have an easy, secure, and fast way to buy Bitcoin. And they have funds with hundreds of millions of dollars to market. They're actually getting advertised to buy this Bitcoin ETF because these funds make money. So not only is there a way for them to buy it now, they're actually being told and sold to buy the Bitcoin ETF as well. Fifth is we had market psychology and dynamics, meaning that retail now is more aware of crypto. And because of what happened with GameStop and the tools that are available now, like Robinhood and Coinbase, there's a lot of people who are interested in investing in crypto. And once this starts popping off, there's going to be more and more people who want to pile on due to psychology, due to greater fool theory. This has been proven throughout markets for millennia, especially since trackable data and since the 1900s. And then lastly, there's more crypto coming out that's actually going to change the world, where you can actually use in day-to-day use cases, specifically in the DePIN sector and the gaming sector. And so that is why I'm so bullish on crypto. I think it is for sure worth allocating some risk capital towards. And now in this next section, I'm going to be diving into my portfolio, explaining how I'm thinking about investing, what strategy I'm taking, and sharing some of my portfolio too. So let's go ahead and jump over there. Woo! All right, fam. So now moving into the section where I'm talking about how I'm investing, what does my portfolio look like, etc., and how you should be thinking about it. And so to start off, I would love to clarify, I am actually not going to be investing in Bitcoin or Ethereum. As shocking as that may sound, I'm not investing in Bitcoin and ETH. I'm going full send on the high risk spectrum. And the reason why I'm not investing in Bitcoin and Ethereum is simply because I will not be able to generate as much returns if I put my capital in Bitcoin and Ethereum. I will make far more money if I invest in altcoins. And so I fully acknowledge that it's increasing my risk, because the further down you go on the altcoin list in regards to market cap size. So if you just go to a website called CoinMarketCap and you scroll down the list, you'll notice that the tokens get smaller in regards to market cap. Don't look at the price. It doesn't really mean anything. Look at the market cap size, especially the fully diluted market cap. That's how you know what these tokens are worth. The further down that you go on that list, the more explosive the returns become. And so just to show you guys again what I'm talking about, come over here to the screen. As you guys remember from the Bitcoin chart, let's go ahead and reference the last bull run. So let's look at Bitcoin cycle 3 here. From the bottom, so like I said, the first year is always a bear market, and then it goes up for 3 years, as you see basically perfectly play out here. From the bottom, let's say you timed it perfectly, which is almost impossible. And then let's say you timed the top perfectly, which is also almost impossible. You would have made a 19x return, which is unbelievable. That's a great return. But this time around, we're not going to see that high of a return again for all sorts of different reasons. Mainly because there's a rule of thumb in the asset world, the investing world, where if you want to see the price of an asset double, you have to double its market cap in new money. For example, let's say you had an asset worth $100 million and it's worth $10 a share. And you wanted to see it go to $20 a share, which is $200 million in market cap. You need to see $100 million of new money come into that asset in order to rise the price. And so because Bitcoin's market cap is a lot higher here than it was here, and so to be exact, this was 3,000, This was 15,000. It's 5x higher. So you need to see essentially 5x more liquidity and new money to come in to get the same multiple on Bitcoin, which is just not going to happen. It's just not going to happen. So in order to see higher gains, like we do see here on Axie Infinity, if you guys remember, so again, timing the bottom, timing the top, almost impossible. But if you did, you would have made 1,133x. So let's just say you got 30% of that and it was a 300x return. That's insane. So that's the kind of returns I'm looking for. And I'm going to be adopting what is called the VC model. And so for those of you who are familiar with startups and how, or venture capital, if you don't know what startups or venture capital is, venture capital are investors who invest in early stage startups, and their business model is essentially making money on a few winners in the midst of a lot of losses. And so a very simple way to break it down is VCs will invest in 10 companies. They expect 5, 6, or 7 of them to go to zero, literally zero. They expect 1 or 2 of them to be a decent return. So in venture capital, it'd be 2 to 5x. And they expect 1 of them to do really well, like 20 to 30, 40x. And they expect 1 of them to be a crazy outlier winner, like 100x or maybe even 1,000x. And the returns from those few winners greatly offset the losses from earlier in the portfolio, and they'll still make a lot of money on top. I think that model is perfect for investing in crypto because it diversifies your risks and it also spreads out your chips to get one winner. And in reality, you can invest in 20 different tokens, and if 19 of them failed and you had just one winner, you could still make an outsized return compared versus investing in the stock market. It's beautiful. So I want to look over here at this chart to show you what that could look like based on past precedent of different tokens that you could have invested in. So let's use a bigger number. Let's say you had $50,000 to invest and you invested it into 20 different tokens equally, and you spread it out against 20 tokens. Let's assume you're going to have 50% of them fail. And what I mean by that specifically is 5 of them literally go to zero, and then 5 of them, you lose 50% of your investment, which is definitely a big ouchie. That would suck. But let's say that happens. And then let's say you had 4 of them give you a 10x return, which is very possible. And let's say 3 of them got you a 25x return, which is also very possible. We saw that earlier in the charts. And let's say 2 of them give you a 75x return, and then 1 of them is a big boy kahuna like Axie Infinity, but you didn't even take advantage of all of it. You could have made 1,200, 1,100x. But let's say you only got 200x. The cumulative returns of all of these adding up equals $1.193 million, which is a 24x return on your portfolio. Pretty cool, am I right? So that's just all theory, right? So you actually have to make this happen. You actually have to pick 20 decent investments, but this is proving out the concept that the VC model does work. And if you're someone who is in this space, who is studying it, if you're actually participating in it, you're looking for trends, you understand all the things of what causes crypto to go up in value to a decent degree, and you place 20 educated bets and the bull market happens, you have some pretty good odds of making money here. And so this is pretty much proven out. So that's how I invest, and that's how I think. I'm thinking like a VC. I am fully expecting half of my portfolio to be a 0 or a 50%, but I'm expecting the other half to give me a range of returns to then add up to a total portfolio return that will still outbeat the S&P 500, that'll still beat real estate, and will be a big winner. And the cool thing is you could have literally had all of these go to zero, all of them. And if you just picked one 200x return, you would have made $500,000 on top of your 50 grand, which is 10x. That's crazy. And so that's all you need is one. And so there's also lots of stories in the venture capital world where you have VCs who are terrible investors, really bad investors, but they picked one Uber. And now they're worth $100 million. And so the model works, and that's how I'm choosing to approach crypto. And so to be more specific, let's actually go ahead and scroll down here to my exact portfolio. And so I've broken down my portfolio into what I deem low risk for crypto, medium risk for crypto, and then high risk for crypto. This is just the pure degeneracy plays down here in the high risk section. And so what I want to do is show you guys what I'm investing in and give you just a high level of what it is. And then we'll keep going on. So the first token that I'm investing in that I think is low risk is Solana. We love Solana over here. Solana is essentially a layer 1 cryptocurrency. It's Ethereum. Solana is Ethereum, but it operates differently. You can think of Ethereum as like Windows operating software, and you can think of Solana as like Mac operating software. They're both operating system. They're both layer 1 blockchains, but they have different fundamental architectures and how they work. And in my opinion, Solana is a way better blockchain than Ethereum. And so the reason for that is Solana is hyper fast. It makes transactions really quickly for sending SOL to other people. And it means all the applications that are built on top of it, they will have lightning fast transactions on this blockchain network. Also, the transactions are really cheap. And so they're like half a cent, if not even less than that. And they're wicked fast. And so I'm a big fan of Solana. It's also a lower market cap than Ethereum. And so I think it's going to perform really well. And so these, this is my actual data. This is this blacked out section. I'm not going to show you guys, obviously. This is actually how much money I've invested into crypto. These are the tokens I have, and this is what they're currently worth. I'm not going to show you that, but I will show you what price I bought it at, and I will show you what the current price is, and I'll show you what the returns are. So I was buying all of this back in November and December, and I'm slowly allocating to some more tokens. But right now on my Solana position, I am up 246%, which is great. And I anticipate this, frankly, this price point to go to at least 500, 600, which may sound a little bit crazy. But again, let's go back to the charts. What happened last year? Let's go back and see Solana. This is Solana when it first launched. And what did Solana do? Solana started off all the way down here at 60 cents, 1 cent, and it went all the way to $260. That is a 260x. Okay, guys? This is crypto. This stuff can happen here. So don't fade this, don't sleep on this, but I don't think Solana is going to do that again because it's already an established cryptocurrency. And as you can see here on Solana, it's starting to rip up again. Surprise, surprise, the theory is working. And the chart is pointing upwards and I think this is going to go. And just to be clear, I was buying it right down here in this area just because I've been paying attention and also, sure, call that a little bit of luck as well. Let's throw that in there. So that's Solana. It's a layer 1 cryptocurrency. I'm a big fan of it. Let's move on to the next one. The next one that I have purchased is Avalanche. And so Avalanche is also a layer 1 cryptocurrency, very similar to Solana, but it's a little bit different in its architecture. Think of Mac OS, Windows OS, and this is Linux, but not exactly, but it's still an operating system. That's a good way to think about it. And so this is the Avalanche chart here. I'll show you guys. If I can get this to load. There we go. AVAX USD. So this is Avalanche's chart here. And Avalanche is very similar. It's a layer 1 cryptocurrency, just like Ethereum and Solana. It operates a little bit differently. It has some different pros and cons to Solana and Ethereum, and I personally really like it. And then I was buying it down here in this $19, $20 level back in November, which was very fortunate. That was the time to get in. But if history repeats itself, I think we have a long ways to go. My price target for Avalanche is essentially 2x its all-time highs, which is $300, and I think it could potentially go higher. So if you were to buy it here at 60 cents or $60 per token, I do think it could 5x, frankly, to go to 300 if everything was to come together. That is my own personal price target on that one. Let's see. The next one here that I have that I am invested in is called Immutable X. Immutable X. So Immutable is a great token. It is something called a layer 2 cryptocurrency. And all that means is it's a blockchain built on top of a blockchain, which I know sounds really confusing, and it is confusing. So what all that does is, all it means is it makes the blockchain that it's built on even better in this own blockchain. And so Immutable, it's like building an operating system on top of an operating system. It's complex, but it's a blockchain within itself, and Immutable, and for example, is focused on gaming. And so like I talked about earlier, I'm a really big believer in gaming crypto. I think it's going to explode this cycle. I think there's going to be some major games that have come out, and I think a lot of them are going to be using Immutable's technology. And when a game, or gaming as the narrative, because we talked about that earlier, when gaming starts to pop off, people will start looking for gaming tokens. Immutable is one of the most popular gaming tokens in the market, and is perceived as really strong and stable by other market participants. And so I chose to invest in Immutable, and so far the bet is playing off. I'm up 127%, which is great. And I anticipate it to continue going up. And so I think this one is empty. Yep. And so I also have a space here for buying another low risk token that I find in the future. So I have, I think 10 or 12 investments right now, and I very much plan on adding more tokens over the next 6 months as well. So now let's move into the medium risk category. But To highlight, I don't think I mentioned this. So obviously I said I have low risk, medium risk, and high risk, but my low risk is 25% of my portfolio. My medium risk is 40% of my portfolio, and my 35% is 35% portfolio. So if I had 10 grand, $2,500 goes to here. If I have $4,000 goes to all these tokens spread evenly, and I have $3,500 going to these if I was investing with 10 grand. And so, all right, guys, so that was the low risk section of my portfolio. So now let's go ahead and transition over to the medium risk section of my portfolio. So the first token I have in medium risk is Beam. So we love Beam. Beam is a gaming token related to the gaming infrastructure space. So again, this is based on the theory that if crypto games start to get adopted and they start to become popularized through TikTok, Instagram, Snapchat, Facebook, Twitch in particular, Beam will also be a token that is a recipient of, ooh, I like game crypto. I'm going to make money on gaming crypto. Let's go buy Beam because Beam's a gaming crypto. That is the theory there. And so this is Beam. I'm actually going to transition using CoinMarketCap versus TradingView because it gives you some more information on the tokens. This is Beam. This is what it looks like, and this is the chart. You may be asking, well, Gavin, what is Beam? So they always have a good description down here. Beam is a native token that serves a crypto asset for the Beam network, which is its own blockchain, similar to Solana and Immutable and to Sol and AVAX. They're all a little bit different flavors and spins. But Beam is an ecosystem where gamers and developers come together to shape the future of the gaming industry. So essentially, it helps gamers build different applications, and it's also a marketplace. It's also a fund where it'll invest in tokens. It's kind of like a one-stop shop for a lot of different gaming tokens. And so what we care about is the story, the narrative when we're investing in crypto. We want to invest in things that we think people in the future will want to invest in, going back to greater fool theory, because that's also really important. But this is also a fundamental play as well, because Beam is actually building things that are going to help gamers have better experiences, and Beam will make money doing that, which is going to be reflected in the token. You can think of it as a little bit of a stock, although it's not a security, some nuance there, but you can think of it like that from an investment standpoint. And so that's Beam. I'm a really big fan of it. It's definitely a big chunk of my medium risk portfolio, and I bought it back at 1 cent, and now it is on its rise to about 3.8 cents. I'm about up 3.8x on it already. I legitimately think this thing can go to 50 cents, if not higher, to be frank. So we'll see how that goes. So the next one I'm investing in, is Gala Games. And so this is hopefully obvious. This is a gaming play. Gala Games is a gaming studio. They build all sorts of different crypto games, and they're one of the largest. And they also have the word games in their name. Yes, like I'm literally thinking about the fact that it has the name Gala Games in it. So let me find Gala. Boom. There's Gala. So it looks like, okay, they actually took the name off of it, which is fine, but people still know it's a gaming cryptocurrency because it's in that category. See, Gala Games, there we go. They, like I said, they make games in the crypto space. They're great. They're also one of the largest, and so they're perceived to be more stable. This is the price of Gala. I was buying this down here in like 2 cents, I think. 2.5 cents, and now it's starting its rise up as Bitcoin's starting to go up because everything follows Bitcoin. It's not a coincidence, and it's already up to 6 cents. And I very much think this could go a lot higher, and hopefully think it can pass its all-time high of 71 cents, which would be a pretty astronomical return. So betting big on Gala as well. So let's move on to the next one. The next token we are looking at is Render, which we talked about earlier. So if you guys remember Render is the decentralized physical infrastructure network, DePIN, which is the category of crypto it is, DePIN, but they make decentralized GPUs where people can rent GPUs off of their blockchain that consumers are offering, and that is what they do. And so this is their chart. Render is now making all-time highs, which is very exciting because now there isn't something called support and resistance that for them to break through from a technical analysis standpoint. It means it has a higher chance to continue to go higher. So I was buying this, unfortunately, a little bit too late. I was really bummed. I got into this one a little bit late, probably around this $4 mark, I think. My average on Render token, actually I don't have it in here. I don't know why, but it's around the $4 or $5 mark, and that should be up roughly around 100%. Around this point, which is great. And I'm a big believer in Render. I would still be buying Render here. I think that is going to explode. They're actually a legitimate company, and I think will compete with a lot of different non-decentralized crypto companies. So there's Render. Big fan of that. Next one I'm buying is Bytes. This one is a bit of a niche play. Bytes is a token representing an NFT community for gaming crypto investors. And so Bytes is essentially a reflection of the gaming crypto world. And I think once we see a explosion of crypto gains being adopted, Bytes as an NFT project will start to explode, and therefore Bytes, the currency that they use, will also explode. So this one's a little bit more speculative. It probably should be in my low risk play. I'm actually down in it right now. It's one of my only two positions that are down, about 40%, but don't really care. I think it's going to go up again, and I also expect some losses, and so it's totally fine. So that's Neo Tokyo. That one is a gaming token as well. The next one is Superverse. I'm very, very excited about Superverse. Superverse is doing a lot of really cool things in the gaming space. Their founder is very legit and is well known in the crypto space. He has a big microphone, and so I think that he'll be able to advertise what he's working on at Superverse. Also, they're just continually like pumping out all sorts of really cool things of what they're doing in the market. And so this is a gaming token. They support other games. They work with other games. They do infrastructure and investments. They have like some add-ons to games you can do. This is essentially in the gaming category. So they said down here, it's a native blockchain, custom tailored for gaming. And by being a super holder, it's also a DAO, which is a decentralized autonomous organization. If you hold a super coin, a Superverse coin, you can also help make decisions of what the Superverse company is going to do as well, which is so that's cool. So you can participate in that, but it's a gaming play. So again, like I talked about, the most important thing I'm thinking about is, will people want to buy this in the future? And so if gaming ends up popping off, the answer is a very, very high odds yes. And plus, there is the team and is the people behind Superverse. Do I think they're capable of marketing their token even harder to pump the price even harder? And do I actually think they're going to try and add real world value? The answer is by far yes for Superverse. And so there is that. And so I was able to get Superverse at 33 cents. And then it's now at $1.26. So it's about a 3-4x, which is awesome. I expect this to be, frankly, a 30, 40, 50x when it's finished, if everything was to work out completely. Okay, next one is Helium, which we talked about earlier, the decentralized version of Verizon and AT&T. This is a company that is actually making money and revenue, who I think will do very, very well. This is their chart. This is Helium. I was buying this very fortunately down here, and I think the $3-4 range is now at $8. I believe. I was buying it at $6, and now it's at $7.65, so about a 22% return. But I'm a long-term believer. I actually think that this token is going to do really well. I think they're actually going to take business away from Verizon and AT&T. Maybe not in the next year or two, but I think long-term this is a legitimate company, and it's a legitimate concept that will work. And so that is Helium. Next one that we'll go into is, that's about it. So these three are essentially, I have 3 more slots in my portfolio for what I deem to be medium risk tokens, which I'm sure I'll very much find those. And so let's actually go ahead and move on to the high risk section of our portfolio. Guys, moving on into the high risk section. I only have 3 of them for now, but this is actually a category I plan on adding a lot more in over the next 5 to 6 months. So probably more than the slots I have available. So let's go ahead and hop over here and check this out. So in my high risk section, again, this is 35% in my portfolio. So if I had $10,000, this would be $3,500. With the capital going in here, let's go ahead and look at this first one. The first one in here is, a company called Seedify. So what Seedify is something called a gaming launchpad. So Seedify essentially helps a new gaming crypto companies get funding, build products, and then launch their product. And in exchange, they get a form of their tokens or equity, stock, but in the form of tokens. And then if you are a Seedify token holder and you stake it in the Seedify platform, which essentially means depositing your tokens into their virtual bank account, savings account, you have access to getting some of these tokens that they are helping fund. And so they're essentially like a startup incubator for games. And so as a Seedify holder, I staked it in their platform. It's literally like depositing money in a bank account, depositing crypto in their bank account, their staking platform. I can now participate in the different companies that come to Seedify that want to launch tokens, and I'll get tokens at a really early price of these brand new gaming projects that come out. So not only will Seedify's price go up, I will get access to tokens for free of these different gaming companies, since I'm essentially like a limited partner or investor in Seedify. which is really cool. So as gaming gets more popular, CDeFi will get more popular, etc. So that's kind of the play there. Pretty cool company and concept within the crypto space. The second one is one of my favorite tokens and arguably one of the highest risk tokens, but fortunately it has been working out wonderfully. And this is a token called Syncus. So Syncus is probably the most high risk in my platform or in my portfolio, mainly because it's essentially a play on human psychology. This token is frankly something called a Ponzi scheme. If you're not familiar with what Ponzi schemes are essentially any asset or anything where the asset price goes up in value because someone else in the future has to continue buying it. And so it only grows because there's an expectation of more people to support it in the future. You guys can go research Bernie Madoff. He went to jail for a long time. Ponzi schemes are illegal. But in crypto, they're not illegal. Well, some of them are illegal. It's a little bit nuanced. So as an investor, you investing in it is not illegal. But if you create a Ponzi scheme, that can be illegal. So Syncus is flirting with that. But Syncus, I think, represents the perfect game theory, economic theory, market psychology theory coming together. And so Syncus in particular is technically called a treasury-backed protocol, which was like, Gavin, what the heck does that mean? They essentially created a token where you can then buy that token and then stake it into their platform, like we talked about earlier, which think of it as like a savings account. You have money, you put it in a savings account, you make an APY on it. So right now it's probably 4.5%, 5%. So if you put $100 into a savings account and the APY is 5%, you have $105 at the end of the year. They created something very similar where they created a token and you can put it into their platform. You can stake it into their savings account, their platform, and you can make 224% on that token. Meaning, if you put in 100 tokens, at the end of a year, you're going to have 324, 350-ish tokens, right around that. Don't know what the math is exactly off the top of my head. So this is a token appreciation play, but it's game theory and it's greater fool theory and it's market psychology all coming together to where they have a very extensive marketing budget that they use in sync tokens to then go get influencers and people to buy their platform, to buy their token, and then stake it into their platform. And there have been lots of projects or lots of different tokens in the past that have done this, and they have exploded in value. I'm talking literally 1,000, 2,000, 5,000 X's if you were to get in really early and you were to hold it through the end. But those projects eventually ended up failing and they went almost back down to zero. They've lost probably 95% of their gains from the top. So you definitely don't want to buy that towards the end. This is a type of project you want to get in really early. And if you don't get scammed, which can also happen in crypto, there's been lots of scams, this project can very much explode. And so I was really fortunate to get in at a really early price. I literally found it the first day it came out, which was very fortunate. It's because I'm on X, Twitter, all the time reading about different crypto stuff. And I found it, and I got in at 0.2 of a cent, and it is currently right around current to coin market cap, 2.6 cents. So I'm going to actually adjust that on here from a price standpoint. Let's do 2.6, which is essentially 1,400% increase, which is like a 15x, which is pretty wild, pretty freaking wild. So I'm up 15x right now on this token, and I am not selling it. I genuinely think that if, one, we don't get scanned by the developers, which I don't think that can happen, but it's always a risk because I'm in their community and I'm always reading different stuff in the Syncus community. I don't think if we don't get scammed and then the protocol, the project Syncus is continually successful in marketing their token and getting a bunch of crypto influencers and people to buy into what they're doing and their mission of pumping the price up, I think they'll be able to get a lot more people to buy into it, and I think the price will skyrocket. And so that is my bet. I'm essentially taking a bet on human psychology. I'm taking a bet that humans will do what they've always done, and they'll buy into stuff like this. And then knowing very carefully, you have to know when to slowly exit towards the top, knowing it's going to come back down. That is Syncus. And so that's a little bit more of a speculative bet. Obviously, it's in the high risk category. And then the last one is similar to Syncus, but it's much more complicated. I'm not as bullish on it anymore. It's called BlackRock Trading Currency. They have the same ticker as Bitcoin, which is interesting. They made that decision. But it's similar to Syncus in that they're offering a very high APY if you buy their token and stake it in their platform. And they're using another way to make money. And so, actually, to be very, very clear, I should have talked about this with Syncus. The way that Syncus can support the 224% APY, because the logical question is, okay, I can buy Sync, I can put it in their platform for 224%. Where does the 224% come from? Like, Are they just printing it out of thin air? The answer is no. They actually have a fixed supply. The way that the Syncus is making its money, to fund the 224%, as well as its marketing spend, is they have something called a sell tax, which is really important. I should have said this earlier. Every time you buy their token and then you want to sell it, you have to pay a 15% fee in sync tokens that get pulled out of circulation into their treasury, which is then funding the APY as well as their marketing efforts. And that is how that's where the sync tokens come from. There's also an unstake and a staking. There's also a staking and an unstaking fee. So meaning every time you put something into their platform to make APY, stake, and then when you pull it out, unstake, you have to pay a tax. And there's also, that's how they make money too. And so it's kind of this really interesting flywheel to where you're disincentivized to sell, you are incentivized to stake, which means taking sync out of circulation, causing the price to go up even more if demand stays constant or grows. It's just a really cool, fascinating economic, psychological game theory coming together into one token. And so BlackRock trading currency doesn't make its APY from that. They're actually making investments into other tokens, and they're expecting to make returns on those tokens to then fund their APY, which is right around 90 to 100% right now. And so I think this one can go up in the future, but I'm a little bit less confident just because of more complicated reasons. But this is currently the breakdown of my portfolio. So if you're paying attention, it's kind of broken down into pure blockchain technology like Solana and AVAX. It's broken into a lot of gaming tokens and depend tokens, and then it's broken down into some like game theory, greater fool theory, economic theory plays that in last cycle have made some pretty astronomical returns. And so that is a breakdown of my portfolio. I'll be adding to it. And so if you have my number, or if you're a random stranger reaching out, sorry, I'm probably not going to be posting more videos if you're watching this on YouTube, but if you have my number and know me personally, you can shoot me a text and I'll give you updates on portfolio updates. But let's go ahead and move into the next section of when I'm planning on selling, because that is really, really important. You got to know when to take profits and walk away because it can go back to zero. So let's jump over there. Okay, guys, you all are champs for staying around this long. Thanks for watching. We're moving into the last section of the video talking about when to sell, which is actually a lot harder than you think, because you can have a lot of unrealized returns, like I'm very fortunate to have right now. I think they'll go higher, but if you don't sell them and convert them into US dollars, you're not going to make any money. And so you got to know when to sell, you got to know when to exit, which is actually a lot harder than people think. And so to reiterate, this is not us investing for the long term like an index fund or like a conservative investment or like real estate or buying an SP 500 ETF. You should definitely be doing that, by the way. If you're not doing that, you should only be doing crypto with high risk capital. Again, make your own decisions. This is not financial advice, reiterating what I said earlier. But this is for the short term. And so like going back to the Bitcoin 4-year cycle that we talked about earlier, let me go ahead and pull up a little chart here again for us to reference. Let's go over to Bitcoin. I'm a big believer in the 4-year cycle. I think this is going to happen again where it happens every 4 years. So we're now moving into the point where the end of the 4-year cycle is November of 2025. And so this is my own personal price target for Bitcoin. I think it's 140,000. It could go higher, it could go lower. I don't freaking know, but I think it could happen. But November of 2025, I'm pretty certain will be the peak of Bitcoin. I don't think it's going to go higher. It could be off by 15, 30 days, but November of 2025, if it follows history, that's when the peak is going to be. And so when it comes to selling, this is one of the things I'm looking at. But there's also a couple of other things I'm looking at as well. And there's essentially 3 major categories. And so if November, there's 3 things I'm looking at. And whatever one of these comes first, I'm going to start selling aggressively. The first is November of 2025. If Bitcoin makes it to November 2025, which it will, it'll make it there, that's when I want to start selling. The second is a 2x all-time high of Bitcoin. So the all-time high currently is 69,000, well, technically 70,000, but from the last high is 69.70, which is why I have 140,000. As soon as Bitcoin gets to 140,000, I'm gonna start thinking about aggressively selling. The last thing I'm looking at is another chart called the total market cap of crypto, excluding Bitcoin and Ethereum. This is a really good chart to look at for altcoins, which is what I'm investing in, showing where are we in the market cycle, because like we talked about earlier, altcoins follow Bitcoin. There's a lot of reasons for that, but this is a better chart. This is a sum of all of the altcoins in existence which also looks like Bitcoin, which makes sense because altcoins follow Bitcoin. So, and as soon as we get to a 2x all-time high or 2.5x all-time high on this chart, that is when I'm also thinking about selling, which almost always tends to be in the November range, December range. Altcoins move a little bit slower than Bitcoin. They're delayed. And so when Bitcoin hits its all-time high, altcoins will hit their all-time high probably 15 to 30 days later. There's a lot of reasons for that, and I want to go into it, but that's what happens historically. So those are the three things. The first is November of 2025, 2x all-time high in Bitcoin, 2x total market cap for altcoins. When those things happen, I am now turning bearish. I think things are going to go down. I'm going to start selling. And I think you should too if you choose to make this investment. And so the other things I'm going to be considering are like how popular crypto is getting. And so if crypto starts to be a major subject in conversations, if you see, famous people who have absolutely no business talking about crypto or investing, start talking about crypto or NFT projects, but it's everywhere. So I'm not talking about one or two every now and then. I'm talking it's everywhere. Like you're on late night talk shows, people are talking about a new NFT project or a crypto thing they're investing in, or your cab drivers or Uber drivers are trading crypto when you're in the Uber, or people are quitting their job, or you turn on CNBC and everyone is ecstatic about Uber. That's a top signal. Things are starting to get really frothy. It's not looking good. But also, I'm looking at a couple other things. 1 and 2 is Google Trends. And so if you guys aren't familiar with Google Trends, this thing is friggin' awesome. What I'm looking for is Bitcoin and crypto. Let's type in crypto reaching peaks, historically speaking, from data. So what I want to look at, this is the past day. I want to see, the past like 2004 to present. So as you can see, crypto peaked really big in interest. Surprise, surprise, in May and November of 2021, which are the peaks of Bitcoin and crypto. Right now, we're not even close. Like we're not even close to touching those from an interest standpoint, which when this happens again, this is obviously a representation of how much people are searching for crypto on Google, the largest search engine in the world. That's a signal of a top. So as soon as this gets back to all-time highs, that's a top signal. And then the last thing I'm looking at is Coinbase and how popular is Coinbase on the Apple App Store. When Coinbase is the number 1 or number 5 or even number 10 downloaded app on the App Store, it's getting a little popular. It's time to exit. So I'm looking at all that together. It's a cohesive decision, but those are some of the signals I'll be paying attention to for when to sell. And then also the biggest one is if you choose to make this investment and we're all fortunate and it works, and you're looking at a number on your screen that's absurd, and it's really high and it's kind of life-changing, you should sell it and get out and go put that into something safe like index funds or real estate. You should never put all of your eggs in one basket like this. There should be a small section of your net worth in your portfolio. Cannot reiterate that enough. Please don't just go full degen and put your entire net worth into this or all your paychecks into this. Don't do that. But I do think you should put some of it into it with whatever you're comfortable. And so those are the top signals that I'm looking at for when to sell. And then lastly, I always have to address this. Why am I wrong? Or why could this not work? Why could crypto not go up? And why could we lose a lot of money? And frankly, I think there's really only 2 reasons why that could happen. The first one is something that would be awful that would frankly screw everyone over, and all of us would be screwed regardless of what you're invested in, and that's World War III. So who knows what's going to happen in the world? The older we get, the more we realize we're not in control, and we're all one phone call, one text message away from our life being imploded. I'm not trying to be sad or like pessimistic or crazy worldview, but you don't know what's going to happen, and World War III could happen, and that would cause all asset prices to get destroyed, especially the more risky ones like crypto. But that's outside of our control. And then the second reason why crypto would go down is if literally every single major country in the world came together and started aggressively banning crypto at the same time. That would cause crypto to go down. Bitcoin, I think, would be resilient because of how it's structured. But if that were to happen, we would be screwed as well. That would not be good. I do think eventually it would come back. It would be really hard to actually make that happen. And there's a lot of economic incentive for different countries to not do that. That's a much more nuanced issue. But if they did, those are the 2 things that would invalidate my theory, and I think we would lose a lot of money. And so, but for me, I think the potential for gain definitely outweigh the risks for investing. And then to summarize, in my opinion, what I think the odds are of this trade. So anytime you make a high risk investment, or really investing in general, even the S&P 500, it's much higher odds. I think it's an odds. And so I think, in my own personal opinion, you can do this investment like this. Imagine you're walking up to a casino table and the game is investing in crypto, and the odds are presented to you that you have a 70% chance of winning. And if you win, you have a 5 to 10 to maybe even a 15x upside return on your money. And if you lose, which is a 30% chance of losing, you lose 50 to 100% of your money. And so if you walk up to a casino table in Vegas and those are your odds, 70% chance of winning, 30% chance of losing. If you win, you make 5 to 15x, but if you lose 50 to 100x or 50 to 100%. How much money are you willing to invest on that bet? That is how I think you should be thinking about investing in crypto and some of these tokens I've talked about, and whatever tokens you choose to invest in on your own. And so that is what I think the bets are. You're just weighing the odds in your favor. I just think there's more things in the column from what I talked about earlier of why it will go up versus why it'll go down. And I've seen enough and studied enough, frankly, over the last decade. I started studying investing at 19, about to turn 29 here in May, to where I'm just convinced that this is going to happen, that crypto is going to go up, and the people who allocate it properly have a really, really high chance of making a good return. And so it's not guaranteed. I really do think it's 70-30, and the longer you wait to buy, the worse your odds get. I really do believe that too. So this is something that you really need to act on sooner. And then if there is an event in the meantime where there's a big dip in crypto, I personally will be buying more. That's how convicted I am, and something for you to consider. And so that is the video. Thanks for watching. I don't know how long this thing is going to be. I've been filming this in chunks, but thanks for watching, guys. This is why I think crypto is going to go up. If you liked it, I don't know, press the like button and subscribe. I don't know if I'm going to make a YouTube channel. This is kind of a lot of work, but this is a little fun. Share this with a friend if you think anyone wants to watch an hour-ish long video on crypto and my thesis. But hopefully this was helpful, and hopefully this is informative, and hopefully this works. And if you choose to invest, we make some money, because that'd be fun. So thanks, guys. Love y'all. Gavin out.